Welcome to this video today, which is all about getting started in Forex trading. For beginners, finding strategies that are going to work and make you profitable. Now, in terms of if you want to win at Forex trading, you need to ask yourself a question when you start trading, and it's this: what is my edge over the majority that lose? Why am I going to win? Now, most beginners don't think about that question. It's a highly competitive business and you need to know the answer. If you ask most beginners, they just shrug their shoulders. They haven't thought about what their edge is. Well, if you haven't thought about it, you haven't got one, okay? Other traders will give answers that are plainly wrong, like, I'm just taking some advice from experts off the net. It's not an edge, okay? You need an edge. Not only do you need it, you need to know what it is, okay? And you need to be totally confident in that edge for you to win with your trading strategy. Most beginners, when they come in the markets, don't do their research, okay, on the right strategies that will work and what it really takes to achieve trading success. Now, can anyone get an edge? The answer is yes, if you go through the right steps. Then you'll end up with a simple strategy you're confident in and you can make money. But I will stress, you've got to go through the correct steps, do the right research and come in with the right attitude. What I've done, put together a little checklist. If you follow this checklist, you'll end up with a strategy with an edge, which can lead you to success. Now let's look at some key points that you need to consider. Okay, in terms of your strategy, you consider these points, act on them, you'll end up a winner in my view. So here are the points. Right, let's look at the checklists for getting a strategy with an edge, a simple one which you can have confidence in and that can make you consistent profits. Now, if you use this checklist, it will help you. Most beginners won't consider it and will end up losing. If you keep these points in mind, there's nothing to stop you getting a method and making money trading Forex. Now, point number one, easy strategies based upon flawed logic. Now, these are the most popular, okay, for beginners when they come in the markets. And when I say easy strategies, I mean, the beginner comes in, it looks an easy and obvious way to make money, but they don't do their research of whether the strategies are going to work. And the strategies obviously don't work, and there's a good few of them, okay? Pattern strategies. You see these all over the net. Pretty patterns going backwards. They look very convincing. They're supposed to repeat going forwards. They don't work, okay? It's like you're trying to predict what's going to happen. Now, pattern strategies are very appealing, okay? And they're mostly sold by marketers. You'd not find a real trader who's promoting these patterns at all, because they don't work. But marketers know that the beginner's going to fall for the strategies. And perhaps the most popular of all is Gartley patterns. And if you look at Gartley patterns, you get all these nice names, ciphers and bats and whatever. They're very complicated. They look clever. And they just plain don't work. And if you want to do your research, just look at the person who developed the Gartley pattern. His name's obviously Gartley. He's a failed newsletter writer from the 1930s who never traded. So if he never traded the strategy, why would you want to do it? There's numerous other pattern strategies. Gartley's most popular at the moment, but before that it was Elliott Wave, you've got Fibonacci. Avoid, okay? High win rate strategies. Now, these definitely appeal to beginners. They want to win the majority of their trades. They think that is the way to make money in Forex. It isn't, okay? You'll see strategies saying win 80% of your trades, 90% of your trades. Well, that can't work. Just to give you an example, I could win 80% of my trades, okay? But I'd never make any money. Why? Because my winners would never cover my losers. A high win rate strategy actually works against performance. Professional traders don't want to win the majority of their trades. They'll have maybe more losers than winners. They're focused on the difference between profits and losses. Your profitable trades being far bigger profits, then your losing trades lose you. I mean, that's the way professional traders make money. You don't want to be making or aiming to make the bulk of your trades profitable. If you do that, you're just like you just be like an amateur trader, which you don't want to be. Okay, so avoid high win rates. Yeah, if you win 30-50% of the time, that's fine. Just keep in mind difference between winners and losers. MT4 trading strategies. These are a joke in my view. You get a lot of people searching, for automated trading strategies. They just plug into MT4 and they're going to make money. Just sit back, just let the program do its work. Automated strategies, they just don't work. In terms of, just think about it. If it's that easy to make money, who would bother basically working? Just sit back and let a computer make you money. Isn't that simple? Repetitive SUs or repetitive setups goes really with patterns. Most marketers, who promote flawed strategies say, just let the strategy do its work. You don't have to do anything. You do. If you're trading chart formations in the real world, you've got to filter them out. You've basically got to decide how much money you're going to bet. You've got to look at the stop loss where it should be. Every pattern is slightly different. I trade mostly, let's say, triangle formations. But everyone is subtly different, needs a different distance to stop, maybe has a different target, etc. You've got to manage the trade. You've got to have discipline to hold your winners, etc. So the strategy doesn't work on its own for a trader. You make the strategy work. Success is down to you. Now, if you want to get a strategy with an edge, what should you do? Well, look up what the great traders use in terms of strategies and techniques. That should be obvious, okay? You don't take the word of some young kid online or someone saying that they've made a load of money and they're driving a Porsche, which you see a lot of online, without evidence, okay? You want evidence of something working. And most people who promote all these short fire trading strategies just don't trade. They make a lot of money selling the strategies, I've said earlier. Great traders, when I say great traders, I mean traders who have made money. George Soros, Jim Rogers, Ray Dalio, Paul Tudor Jones, Ed Seykota, Warren Buffett, those sort of people. They've made money. Go read about how they make money, what type of strategy they use. They're not going to give you their exact strategy as such, but you can see the methodology, okay? Then you can work out a strategy based around that methodology. Now, if you were to study the great traders, you'll find many trade the fundamentals, there's others who trade the technicals, and there's a group who use both. They use the fundamentals and technicals together. Now, in terms of which is the best method, there is no best method as such. It just depends on the trader, okay? You can make money in lots of different ways, okay? My own personal view is the best way to do it is to use the big fundamental sentiment towards them and time with your technicals. I've done plenty of videos on that style of trading, but I'm sure that most beginners who are watching this video would like to focus on a technical trading system, okay? Now, in terms of a technically based system, what you want is a technical strategy that has got sound logic based upon the psychology of price, i.e. that you know why it works, okay, and why it will continue to work. I'm just going to give you some examples. There's many more, but I'm going to give you 3 examples in terms of how you could trade for profit with technical setups. Now, setup number 1 I really like. Tight sideways channels, okay? When volatility is very low, price is moving in a channel, buy or sell a breakout from that channel, higher volatility. Look back at that type of setup and you'll see it'll put the odds on your side. Why? Because when prices are trading in a tight range, supply and demand fundamentals behind the chart are in balance. So when it breaks out, those fundamentals have changed. You don't even need to know what they are. Just trade, go with the break. Another way would be to trade price spikes. Look at a chart. You'll see trends and you'll suddenly see big accelerated spikes to the upside. Go against them. Basically, trade contrary to them. Why? Go look back on any price chart you like and you'll see those big price spikes always fade. A good proportion of the spike or all of it. Why does that happen? Because it's human psychology. Traders push prices too far to the upside. When greed is around, then when fear takes hold, they push them too far to the downside, then prices return to fair value. Okay, that's a timeless way to make money. Obviously, you've got to do your timing right, but and never go out of date. You go against human psychology. Obviously, breakout trading, breakouts of big levels, that can work. You can also do fake outs where you're looking for the breakout to fade. So go through the breakout point, sell it back through, okay? Because a lot of breakouts, when they occur, do fade back because there's not enough buying power. I mean, those examples there, we've got plenty more on our channel. They're just timeless ways to make money. You don't need to do much more than just have support and resistance, candle confirmation. You might like to use volatility or whatever, but you can keep it very simple. So look up a strategy if you're doing technicals that you know the psychology of the market supports it working, okay? Right, point number 5, your huge advantage over the majority of traders and even professional fund managers. What is it? You don't actually have to do trades. You can sit on the sidelines and wait. This is another problem with traders, okay? They think trading often is the way to make money. It isn't. You need to sit back. Okay, if you look at the majority of funds, and they'll have a dire performance. There's obviously exceptions, okay? Why do they have a dire performance? Because they've got to trade. They've got to make money to pay for their overhead. So they're not trading for the profit of the client, they're trading for the profit of the company. So if you look up the bulk of managed funds, okay, around, you'll see they've got dire performances. Most are losing. There's a few winners there. Not many making more than 10%. There's this big myth that professional, companies make money. They don't. It's one of the biggest myths out there. As a private trader, you can just sit back. You're not interested in making commission, okay? You're just interested in making money for yourself. Okay, so you wait for high odds trades, you hit them, you hold them, okay? I know people trading, once, twice a month, maybe, up to half a dozen times some, but they're making like 100, 200% per annum on their money. Now, that is contrary to what is taught online, of course, because day trading is huge. It's a waste of time. And, anyone who promotes day trading strategy can never give any supporting evidence of profit. You might be saying, well, brokers say it's a good idea to do it. Well, they would, wouldn't they? They make money out of you, lots of it. Market maker, you'll end up giving them your account. Day trading does not work, okay? Markets are too noisy today. It worked maybe 30 or 40 years ago before the internet, but not now. Money management, entry and stop. You can have a simple strategy. Most traders focus too much on the entry. You need to put as much emphasis on the stop as the entry, okay? Because what you need is to protect your position, not lose too much money, but your stop mustn't be in the market noise. And a lot of traders can do good entries, but can't get the stop right, get knocked out the market. Then prices go back the way they thought, and they're not in. Okay, that happens so frequently. You need to have good distance to stop, and basically manage it daily. So my a view of this is when you're doing a strategy, entry and stop are so important, and they're equal. The entry is not the be all and end all. Stop, very important. Money management overall, many different ways of making money, but you need to focus on money management, not just on your trades when you put them on. You need to manage the risk and look at your overall account equity as well. We've done plenty of videos on money management techniques. You can look them up, but it is the foundation of every successful strategy. If you've got poor money management, you'll never make money. Point number 7, learning in the real world. Once you've got a simple strategy with an edge, you need to practice it. Get used to it. Get used to the subtle differences between chart formations. Now, you do it in a demo account for a while, just to get used to the strategy maybe, and look back on numerous charts just to see how your strategy would perform. Yeah, just get a feel for it, so to speak. But the only way you're going to become profitable is to dive into the markets, accept that you're going to lose, okay? Probably when you start. You're going to make mistakes. Yeah, there's no trader that I know of who's become really good, who hasn't made a load of mistakes in the real world. Like you say, well, I'll cut my loss, then you don't yet run a little bit, then it becomes too big. You know you shouldn't snatch a profit. Then you do. You learn from those mistakes, okay? The psychology of the trader is the most important thing in terms of making money in Forex. The strategy is that you've got to have a strategy, but you just got to have that right psychology to execute it. I would say psychology is 70 to 80% of trading success. Anyone can learn simple trading strategies that work. Very few traders can execute them in the real world with discipline. Yeah, you just got to get used to it. Understand there's a learning curve. There's a learning curve in anything, okay? The strategy that you've got, you know possibly it can work, but you've got to make it work. And that's what a lot of traders, they fail to realise. They think the strategy is more important. It isn't, it's you, okay? Right, so if you're going to do your research, keep those points in mind. You could end up becoming a successful Forex trader. Most beginners won't, but that'll never change. Yeah, beginners coming in the markets, they just want easy money, quick money, where they don't think about the Forex markets and how they move in enough detail, etc., etc. I mean, anyone can go through this checklist and make it work for them. I hope you use it, and I hope it works for you. Thank you very much for watching me as usual. I hope you found the video informative. Take care and have a good day.